Well, hello again, Solis Wealth family. Greg Solis here with the update. First, on the family front, I got Nicole in town. So excited to have her in town. So I got Nicole in town, I got Emily in town. Hopefully Jack will come visit us. We'll get the whole family back together again. Nicole's only gonna be in town for a couple, 2-3 weeks, and then she'll be heading back to Hawaii. She got a job, she's doing great. Exciting time for the family for sure. Emily's excited, she'll be heading back to school August 4th. Hard to believe it's already coming to an end. But we've had a great summer. I hope you and your family have had a great summer as well. Well, market-wise, continues to move pretty nicely. The equity markets continue to hit new highs. Measured by the S&P 500 and the NASDAQ, they have cranked along nicely. Well, what happened last week was the inflation number came out. The consumer price index was only up 3%. It was a little below what the economists had been expecting, so that was good news. And now there's about a 96% chance that the Fed will be lowering rates at the next September FOMC meeting. So that's great news. The market's already priced that in. When we get that kind of a number on the consumer price index, the labor markets are getting a little weaker. That's highly likely that they will be lowering rates at the next September meeting. So that's good. We saw a little bit of that rotation happen that I talked about during our last time. Of course, what's been driving the markets for the most part, the so-called Mag 7 or the mega tech stocks. They've been driving the markets for the most part, and I'd mentioned last time I'd like to see a little rotation. Well, the good news is with the interest rates coming down, we saw the small cap index really make a strong move, one of the bigger moves we've seen in the year, frankly, for the last several years. And so that was good to see a little bit of rotation where it wasn't just the Magnificent Seven driving the equity markets forward. So we're seeing some participation with some of these other stocks. That's good. The interest rates are coming down. That's good. Bond market had a really good rally. That's good. We saw the 10-year Treasury go all the way from about almost 5% back in October, all the way down to about 4.12%. So that's really good for the bond market. So traditional bonds have performed well. Small caps have done better. Of course, this artificial intelligence and these the Magnificent Seven, I'm sure will do just fine over time. So overall, it's been a pretty strong market. Things look pretty good, but we're expecting some pullbacks and some volatility. So hang on tight. We expect to see some consolidation. Again, like I said last time, maybe a 3 to 5% pullback would be good for valuations. We're getting a little ahead of ourselves on the valuations of the equity markets. Other than that, everything's in good shape. If you have any questions, concerns, or there's anything we could do for you, never hesitate to call. My best to you and your family. God bless.